Hi, this is Brent with another chart breakdown for trade therapy. We are talking about Dollar General. Dollar General has gone through a distribution and markdown campaign. We are making this video to support our coverage for SMCI. We just dropped a video for SMCI and talking about the differences between recognizing distribution and reaccumulation. We identified distribution here in Dollar General and DG pretty early. This is when we started posting. We posted this in Q1 of 2023. You can see the bearish divergence we identified. But what really tipped us off was this long markup campaign, this top shelf that had developed here. These price breakdown structures here. You see us referring to breaking the ice here. There is a similar concept in Wyckoff theory to the creek, which is down on an accumulation structure. There's a theoretical line here, which would be a creek for this reaccumulation structure right here, and price will break out above that creek. At the top, it's the creek frozen, so they refer to it as ice. What that is the resistance for the short trade down, similar to how the creek is the resistance to the long trade while they're accumulating. The ice is the resistance to the short trade. So when you see it broken here, when you see these sharp drops underneath that after you've had a long markup campaign, after there's a shelf developing at the top, and those are indications that they're preparing the path of least resistance downward. We identified the 382 fib as most likely the initial target because of this congestive or this small little reaccumulation area here. And as they did implement their markdown campaign, as it fell through the ice, it did land right at our target. This is what the chart looks like today. You can see it fell down here and then recovered back up, only to reject the weekly moving averages. You see us referring to it as falling through the ice. What that means is basically they have taken support out or resistance out for the short trade. And so that's the direction they're going to take it, down the path of least resistance. We did identify the 786 fib area as probably where they'll try to reaccumulate it here. This is the bottom shelf. This is the institutional shelf. The top shelf is always the retail shelf. So always take a look at the bigger picture, see where something is at in its institutional cycle. If you are long DG and looking to add, I would look for a break in this trend line right here, where it will start its new markup campaign and new uptrend. It's going to accumulate. It could go sideways here for a period of time. It'll reaccumulate probably around these price levels right in here. I hope that's helpful. Distribution and markdown campaigns are never fun unless you're able to get in front of it. Imagine having traded the downside here. If you had been reading up on trade therapy or following trade therapy at the point when we were identifying this as a down trade or a short trade, we all would have done very well. So I hope that helps.